Are down payment requirements different in different states? Listen on, I'll break it down. Hi there, I'm Ella Gurfinkel, Senior Loan Officer with Team Ella at Fairway, and I'm here today to answer your questions and the questions you maybe didn't even know you actually had in the beginning.
If you're looking for a professional to handle your mortgage for your home purchase, whether it's your home to live in, an investment property, or a vacation home, look no further. I would love to take you by the hand and guide you through the process. The consultation costs nothing. Here is the calendar link for you. And if you want to, here is my phone number. This is a place where you get blunt answers, no sugarcoating, and I will take you literally by your hand from the beginning of the transaction to the very end.
So, down payment requirements, do they vary by state? Well, the short of it, no. And let me explain to you why. All of the financing, or most of the financing, I'd say 98% of the financing nationwide is backed by Fannie Mae, Freddie Mac for conventional loans, Ginnie Mae for what we lovingly call Govy loans, meaning your FHA, your VA, and your USDA loans. And then some larger investors for the so-called non-QM or the so-called non-traditional loans. What happens though is, because the financing is provided by some pretty large entities nationwide, the requirements, what we refer to as the guidelines, are also the same nationwide. So if you're buying a home in Florida with an FHA loan, or in the state of Washington or even in Alaska, the down payment requirement is still the same, 3.5%. Conventional loan, 3% if you're a first-time home buyer and fits certain other requirements. Again, whether you're buying in Vermont or you're buying in Hawaii, still the same thing. But what does differ state by state, and that's where it gets interesting, is what kinds of down payment assistance do the states provide? And that, my friends, is the million-dollar question, because those vary greatly, again, from state to state. Some states have very robust down payment assistance programs. For example, take California. There is multiple programs, not just the statewide ones, but there is also local, county, and city ones. So you could tap in to quite a bit of money for the down payment and buy a house with pretty much little to no money down. The base is still 3.5% to 3% minimum down, but you can find that through down payment assistance sources. Again, down payment assistance, like I said, varies by state, municipality, city, county, area, sometimes for specific employees, sometimes it's actually for the Indian tribes. Sometimes, depending on the source of funding that those down payment assistance agencies have, you have to check in with them to see if they still have the money available at different times of the year. Because sometimes when they're awarded a block of grant money, some of them run out of that block of grant money, usually very fast. Some of them will stretch the money out and limit the number of grants or limit the amounts of down payment, etc. First of all, look for and talk to a qualified mortgage professional and see what down payment options are available where you live. And then the mortgage professional yourself can check if that money is still on the table and still available. Because believe me, over my many years of this professional activity, mortgages, I've seen state agencies run out of money within usually first 3 months of receiving the block grants for the down payment assistance. So on paper, they may be there. In reality, check if the funds are available. Now, the other one, and it's probably the best kept secret as far as I'm concerned, it's one of my all-time favorites, is IDAs, individual development accounts. Those little buggers are a gold mine. Again, subject to funding, subject to availability, subject to qualifying, yada, 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 all of the disclaimers that I can throw in there all into one pot. But the idea of the IDA, individual development account, is freaking amazing. Meaning, you put the money into it, a savings account, and it gets matched. And different agencies, based on their different conditions, will do different levels of matching. There are matches of 1-to-1, meaning you put in 100, they match 100. Some of them will match 2-to-1, 3-to-1, 4-to-1, subject to availability of funds, subject to conditions, etc. But also there is usually a max that they will match up to. Now, the kicker with those is that you're required to put the money into that program regularly. So basically, you can't put in $100 today and then another $100 6 months down the line and they will match. It doesn't work that way. You have to regularly put the money in that they will match, and typically the minimum amount of time you have to be in that program is 6 months. The longest I've seen them go is, I believe, 3 years. Ideally, you could be in and out of the program probably in about a year and have a chunk of money for your minimum down payment and buy a home of your own. Now, if you want to know more about down payment assistance sources in the states that I can do business in, and we'll post a map for you, reach out and I will help you. Talk to you in the next one. Make sure to subscribe and stay on with us. See you on the next show.